Let's take a look at what's happening in the property market this weekend. Around the country, there'll be 724 auctions. That's up 44% year on year. In Sydney, there'll be 455 auctions. Around regional New South Wales, there'll be 112. In Melbourne, there'll be 625 auctions, with another 44 around Victoria. Brisbane will have 141 auctions, with another 119 auctions around Queensland. In Adelaide, there'll be 147 auctions, and Canberra will have 63. On to the most viewed properties going to auction this weekend. Topping the list is 34 Mersall Road, Alphington, Victoria. And this home sets up the theme for most of this week's most viewed auctions, Turn the Key homes. This one has been luxuriously renovated and features a blend of Californian bungalow with modern sophistication. It has a price guide of $3.2 to $3.5 million. Next is 5 Westbourne Street, Drummoyne in Sydney. It's a clean, classic-style home with 3 bedrooms, 2 bathrooms and space for 2 cars. Has a price guide of $1.5 million. In third, we have number 3 Vert Street in Kylaw, Victoria. It's been renovated with high-end materials and premium finishes and features a spectacular central staircase. It has a price guide of between $1.55 and $1.65 million. Rounding out the list, we have 15 Graham Street, Surrey Hills in Victoria, with a price guide of between 1.5 and 1.6 million. Lastly, we have 14 Surrey Avenue, also in Surrey Hills, Victoria. That has 3 bedrooms, 2 bathrooms and a price guide of between 1.3 and 1.4 million. The top listing for this week is straight out of the 1970s. It's 344 Beach Road, Blackrock. That's the southern suburb of Melbourne, dubbed the Sard House. It was designed by renowned architects Holger and Holger and has been mostly untouched, with colourful wallpaper and hand-painted tiles. Documents suggest the home was commissioned by the Sard sons to pay tribute to their father, and it emulates a grand residence left behind in Lebanon. It has 5 bedrooms, 4 bathrooms and space for 6 cars. It's a stone's throw away from the water. It has panoramic views from its oversized glass windows. Much of the charisma of the house has been preserved, with a retro kitchen, original light fittings and furnishings. Outside, it's got a pool with poolside lounge and a built-in wet bar. It has a price guide of $3.85 to $4.15 million. Perfect for those that love to host 70s themed parties or appreciate the retro look. And I must say, it is quite a look. Let's bring in our next guest, Eleanor Creagh, Senior Economist at REA Group. Eleanor, thanks for coming on the show today. How do you assess the market conditions at the moment with falling auction clearance rates and falling sales volumes?
Certainly market conditions have deteriorated as interest rates have risen quite sharply and very quickly. Prospective buyer demand has certainly moderated, and it's not really surprising given at the moment potential buyers really have a lot more uncertainty around where future borrowing costs are going to be than they've had, say, over the last 2 years or so. And of course, as interest rates have risen, mortgage rates have climbed, borrowing is now more expensive. So for many people, they've seen their budget shrink and the cost of servicing a mortgage has risen as well. And we've seen at the same time that as inflation has surged, consumer confidence has taken a bit of a setback. So all of these factors are combining at the moment. And we are seeing that the housing market conditions are deteriorating somewhat. Sales volumes have slipped quite quickly, and particularly so in Sydney and Melbourne. And actually, if we look at the month of July and compare it to the month of July last year, sales in Sydney are down 30% and in Melbourne down 29%. And that's at the same time we're seeing auction clearance rates tick lower, and of course auction volumes also trend lower.
PropTrack released its home price index for July this week as well. And how has the national property prices been tracking in July?
So as interest rates have risen, we've seen that prices have quickly began to fall in some parts of the country, but the PropTrack Home Price Index is showing that at a national level, home prices have fallen 1.66% since their peak in March, as buyer demand has moderated and as borrowing costs have risen, and that's certainly weighed on prices.
Why is it that Sydney and Melbourne are the 2 major markets that are leading the price falls?
Yeah, so it's an interesting question, and certainly we're seeing at the moment Sydney and Melbourne are, as you say, leading those price falls, and both Sydney and Melbourne markets, according to the PropTrack Home Price Index, are now down more than 3% from their respective peaks. And it is typically what we see in a housing downturn, is that the more expensive end of the market, or the higher value properties do lead the downturn, so to speak. And we're certainly seeing that within the Sydney and Melbourne markets themselves, that it is the higher value end of the market where prices are falling more quickly at the moment. So that's looking at those suburbs that were the previously kind of super popular suburbs that really led the upswing, suburbs in the northern beaches, the eastern suburbs, even the Central Coast and Mornington Peninsula as well. We're seeing that those are really the places where values have declined the most over the past 3 months.
And what's PropTrack's prediction for how long will these prices continue declining for? When are we going to see the bottom of the market?
It's an interesting question, and there's certainly a lot of different factors that come into play here. Of course, how high and how fast interest rates continue to rise is going to be a key uncertainty that will, of course, play into the housing market price falls. And of course, whether we do see stronger wages growth materialising at some point this year. We know unemployment is the lowest it's been in 48 years. The labour market is incredibly tight. And if we are to see stronger wages growth coming through, that could offset some of the pressures of interest rate rises. But at the moment, we're looking at price falls of 9 to 15% by the end of next year on a national basis. But with Sydney and Melbourne potentially seeing larger price declines and really continuing to lead the downturn as is already in play.
Well, Eleanor, Senior Economist at REA Group, thanks for coming on the program today.